Joining me now is Wayne Bramwell. He's Managing Director of Westgold Resources. How are you, sir?
Great to be here, Mark.
Let's talk about this company. You've got a hub and spoke model. You've got a turnaround underway. You've got 4 producing mines, 3 plants in Western Australia. So give us the broad strokes here.
So Mark, we had a really complicated business last year, impossible to model, difficult to manage. So FY23, it's all about simplification. Less is more. So we're down to 4 underground mines now, 3 mills, and on track to deliver 260,000 ounces for the full year.
Very good. Now, you said you're streamlining into a leaner and less complex company, and you want to produce safe and profitable ounces. So what goes into that cost discipline?
Really, cost discipline and operating discipline have been things which we've needed to improve. Safety, our safety stats have been quite poor, to be honest, over the years, and we've invested a lot of money in our safety systems. We're now starting to get to a position where our safety stats are more attuned to our peers. Operating discipline are key words. I mean, we very much had an approach about ounces in the past, where now it's about profitable ounces. Really, the cost climate in WA went crazy in FY22. We were a little late in some sense, to address that. So the reset and streamlining the business is really about profitability. So it's really taken a change in leadership and the culture to drive a different outcome.
Very good. Now you've got 8 drill rigs running right now, and you're looking to expand Bell and Bluebird, and then you're optimizing Starlight, Paddy's Flat. So you've identified high priority targets. What's the plan right now?
Really, drilling is something which we haven't done enough of. In the last 5 years, we've under-drilled our resources, and that's put us in a difficult position. 8 rigs running now. The real focus is resource definition and extending some of the ore bodies, and certainly the numbers that we're seeing out of Big Bell and Bluebird are fantastic. What I really like is what it's doing for the workforce. I mean, they've not seen these drill results in the past, and it's giving them confidence about the longevity of these mines.
Now, you decided not to pay a dividend in the first half. You're sitting on about $160 million in cash, no debt. Were shareholders pleased with that? They thought it was a smart, prudent move?
Pretty much. The feedback I've had was, we see where you are. You've communicated to the market that their strategy was stop the bleeding, stabilise the business, set it up for growth into FY24. So people are giving us the benefit of that, and happy where we are at this point.
And lastly, Wayne, you know that investors have lots of options out there. With your company, there are things happening, things moving and changing with catalysts as well. So what's the overall investment case, would you say?
I think the turnaround story is getting some traction now. Westgold has been a well-known story to some. People are now getting curious about it. But again, the thematic of profitable ounces versus ounces and showing free cash flow is starting to get some traction. Our drilling is starting to show some excitement around the stock. Our biggest asset, Big Bell, now is cash flow positive after many years of capital reinvestment. So people are now starting to see, okay, this company's starting to act like a mid-tier corporate. I think where we are in the Aussie gold market, that's an unusual place, because the Aussie gold market today, there seems to be a tale of two ends. People with cash and no debt, and others with stressed balance sheets. I think Westgold's on the right side of that equation.
Thanks for the update, Wayne.
Thanks for the time, Mark.
Okay, Wayne Bramwell, and he is with Westgold Resources.